Welcome back. It's 9 o'clock, which means the pre-open rates will start to come up on your screen. They're at the bottom of the screen, 60-odd points lower. But give it some time. Usually the rates are a bit jumpy right at the word go. They settle down in the next 6 or 7 minutes. Well, it's, of course, a special day with the 23rd birthday, which we're celebrating in full gusto, with full gusto. Our team, Nigel, is there at the National Stock Exchange, but so is our managing editor, Shireen Bhan. Shireen, hi, good morning. Congratulations to you. Congratulations to all of us. And you've been here right from the word go, 22 of the 23 years at CNBC.
Year to date, my 22nd anniversary here at CNBC-TV18, and what an absolute fabulous journey it has been. Congratulations to everyone, Prashant. And, you know, I have to say that it has been a journey where we've seen the markets go up, go down. We've seen the Indian economy open up. We've seen the Indian economy change. The complexion of corporate India has changed since the start that we started covering business news. And what a fabulous experience it really has been for all of us here at CNBC-TV18 to chronicle India's story. And today is a very, very proud moment. I have to say, thank you to all of our guests, not just for joining us here at the National Stock Exchange this morning, but, you know, they join us every day. They take time out of their day to be with us, whether it's early in the morning or in the afternoon or late in the evening. So thank you all to those who are here with us, but also those who are not here physically, but with us in spirit, but join us day after day for all the support that you've given the channel and the team through the years. So thank you very, very much. Our gratitude to you. But Nigel and Nimesh, I'm certainly hoping the markets open in the green. I'm dressed for that. So let's hope that that happens. But Nigel, over to you.
Well, Shireen, it's going to be a little difficult task for you to open in the green. But since you've worn green, hopefully at some point of time, we do visit the green terrain. You know, I'm thrilled actually today, 23rd birthday. I remember when I was 23-year-old, I was walking into the same institute to try to get in National Stock Exchange many years ago. And today I'm with the best business news channel, so very, very happy. In addition to that, need to sneak in that it's my mom's birthday as well. So absolutely thrilled to be here. But and I'm going to be with the most informed man for the last 12 years, Nimesh, all through the day. Nimesh, how are you seeing things shaping up today?
Well, Nigel, you know, it's really been a pleasure to work in CNBC with under Shireen, under all the other leaders as well. Been for me almost 17 years in CNBC now. Fabulous journey, and you know, the amount of access you get to meet some of the best minds in this country. You know, I've been meeting Madhu, Sunil, everybody, Nilesh Bhai for so long now. And, you know, with warm hearts, they'll always, you know, they'll sit with us, teach us, you know, make us understand what this means, what is this all about. It's been a fabulous journey. And actually, we should thank all the, you know, market participants who've been here, Navneet, Sunil, Madhu. They've been so supportive, and not only to me, to the entire team, you know.
Absolutely.
I've heard so many of my colleagues going and talking to them and understanding markets and understanding news. And they've been always supportive. So
and you know, I just want to come in there. I think that's one of our strengths. I firmly believe that we are a learning organization.
Absolutely.
I think we've built that culture where we don't believe that we have all of the answers. We don't believe we know it all. And so it is very important for us to learn from each one of you, learn from our audience as well. And we really appreciate all the feedback that our viewers have sent us over the course of the last 23 years.
And you know, Shireen, I'll just add to this. I think that's been the trademark of all the market experts. You know, the first thing Navneet came and spoke to me in the morning, kya khabar? You know, I said, you are the khabar today, but anyway,
we have to ask him kya khabar.
Exactly.
We have to ask him kya khabar. But I know, Anuj, you wanted to come in.
Yeah, you know, since Shireen, first of all, congratulations to all of us. And, you know, I have been part of, out of these 23 years, almost 20 years almost. And actually, the significance of 23 for me is the day I joined CNBC-TV18, it was my 23rd birthday. You know, for me, it's been the only organization, I mean, the network that I've worked in. And it's just phenomenal to see the network grow. And, you know, the best thing about this network is that it lets people grow, and it's made so many of us, you know, into individual brands, apart from, of course, the big iconic brand of CNBC-TV18, and now I say CNBC Awaaz as well. So I think congratulations to all of us. Just phenomenal. It's privileged to be part of this network, and I think every single day, you know, I thank my stars that, you know, I've been part of this family.
I thank my stars that, you know.
Absolutely, but you know, we have to talk about the markets. We're pretty much getting to the opening. So Nimesh and Nigel, we've got the best market minds here with us. Over to you guys.
Well, that's right. A couple of stocks that we'll be tracking, HDFC AMC, I think that's something that we're looking at. And, I'll tell you what, today that buy on dips has worked. Today that's going to be put to a test, right? Because we have been seeing on a day-to-day basis 50-80 point dip on the headline index and over to the RBI governor. So we'll have to watch out for the commentary on that front and we'll take it from there. But, Navneet, you want to say a few words, I think. So, tell us about how things are shaping up.
No, sure. So I think it's nostalgic for all of us also. Last, congratulations to Shireen and the entire CNBC family. I should say 23 years of building trust between business and government, between business and investors, between business and society. And trust is the oxygen of capitalism, so great job done. Also, Shireen, because it's your 22nd anniversary, I must say that the another big thing that CNBC family has done is promoting diversity. And people like you and so many in the channel over the years, I think the diversity that you have produced, what you have given to the field of journalism is commendable to CNBC. And the third thing I would say that this is the year where domestic investors have shown their might.
Yes.
But I think you are the ones who have also played a very big role in building that faith and trust in the long-term power of compounding of Indian economy and Indian market. So many, many congratulations to you. I just had one thing, Shireen, because you are here. You started Young Turks at 20 years back, right? This is the 20th anniversary. Today, everybody talks about unicorns. People talk about the startups. You were way 2 decades ahead of that time.
Wow.
So many congratulations to you for that.
Thank you so much. And yes, if I had been able to invest in some of that, I would have been a far richer human being.
I just at one point when you started our mutual fund industry, Nilesh bhai was 1 lakh crore, and we are 40 lakh crores today.
Yes,
Thank you for that.
So,
maybe also request Ashish Chauhan. We're here at the National Stock Exchange, so this celebration cannot be complete without having Ashish join us. Thank you very much, sir, for being here with us, and appreciate your presence here to mark this important milestone. Appreciate it. Yes, Nilesh.
Madhu, I want to come to you. You've treated us all like our family. In fact, you've got your wife as well today. We'll get her as well. But between you and Sunil, you all started the small cap fund way back in 2005-6, I believe, or 2010. I think that time even 300 crores was difficult to raise, and today that fund itself is 25,000 crores. Tell us your experience of the last 20 years in this market, and what has been big contribution to us as well as to the investment community.
Sure. First of all, thank you for having me here. It is really nostalgic I think, it's, CNBC is like extended family, at least for me, that whenever we are here, we don't think that we are going to media per se, And it's been so nice to work with all of you. I must say, Shireen, the humbleness and the humility which all of you have, in spite of having such enormous power, is unprecedented, right? And as Navneet was saying, that, the role which you guys have played in bridging the trust between the corporates, between the investor, and between the fund houses, I think you have had a very big, very meaningful role in shaping up the way capital markets in India have shaped. These 4 crore new investors who have come in the last 2 years, I think CNBC's role is extremely imminent, and it's been absolutely a delight and a pleasure to be part of this journey. That we have also spent 30 years, out of which 23 years with CNBC. And in this time frame, the way markets have grown, like, as you were saying, raising few hundred crore rupees was so difficult for a fund house. Now one fund is taking 5,000-7,000 crore rupees bet in one individual stock. So this is how the numbers have grown. 1 crore investors have become 8-9 crore individual investor. Ashish is here, and of course he has played a crucial role in this journey as well. And really, from my bottom of heart to the entire team of CNBC, heartiest congratulations, and I hope this journey continues.
Thank you so much, Madhu. I'm going to come back to each one of you in just a second, but we've got a couple of minutes before the markets open. I think 3 minutes to be exact. Let me go back again to Samir. Samir, it would have been lovely to have you join us here at the NSE, but you're speaking to us as you always do from Singapore. So thank you very much again for joining us. Samir, what's going to be the big trigger from here on? I mean, we're almost in the last lap of 2022. As far as 2023 is concerned, Samir, what's the view?
So my view for next calendar year is that once the US markets stop falling, which will happen in the next, I think, 2-3 months, or they may have already stopped, then we will have absolute returns. And India will pay for its this thing in terms of, having not done performance this year in absolute. Over time, this would also get absorbed, and over time, our returns will be in mid-teen for a long, long time.
Okay, well, it's really a humbling experience to be a part of this beautiful journey, right? And to see all the market veterans right there at the NSE waiting to ring the bell. We have just a couple of minutes before that happens. But this mutual fund industry, I mean, Samir, Nilesh was talking about 1 lakh crore to 40 lakh crores, this mutual fund industry move. I mean, it's been phenomenal, the ride that we've seen. Do you think the retail participation will continue to go up despite whatever happens with FIIs?
No, we shouldn't say like that, because that makes it look as if the domestic guys don't know and they are just blindly coming in. So we should think not like this, that doesn't matter what happens to the world, doesn't matter what happens to FIIs, these poor domestic guys have no other choice and they are just... So the big picture is that everybody should invest in equities. Over time, equities outperform fixed income. Over time, equities outperform property for most of the investors, maybe not for developers. And therefore, there should be a reasonable allocation to equities, which Indians did not have for a long, long time. But we should still not sell it, treat it, that every day these guys have nothing else to do, so they will put money in equities. But big picture trend is true, that has started 4-5 years ago. And as people see other people's success, as they see their neighbors putting in and doing well with their investments, over time this confidence grows and this continues. But let's not, that's what I'm saying, let's not hard sell it beyond a point. It is just that everywhere in developed markets and everywhere else, the equity allocations are quite high. And in India, people are still building it, and then more people are joining the middle class or investing class, and therefore the growth story is for long. But let's not say independent of what happens to FII is independent of what happens to the world kind of thing.
No, I think absolutely point taken. By the way, the markets absolutely, the pre-open is settled absolutely flat. So we'll see, we'll pick up from where we left off yesterday, I guess, with, of course, I mean, the US, which was down once again. But I mean, the impulse has been to try and buy the dip, and that has worked for the last so many days, while the US session has had some trouble. Just 2 minutes out as far as the market opening is concerned. Actually, 1 minute and 50 seconds or so. Samir, I don't know if you can squeeze this in quickly. These new age companies, which you've been no fan of, really, have they fallen enough, you think, or there is a lot more to go, in your opinion?
Well, now we own 2 of them. We first bought Zomato and now we own Paytm. And we don't own it, but we also like the third one. I won't give its name since we don't have it yet. So I would think that at least we feel that for our style of investing, which is that we buy for 50% of the portfolio, we buy about 20-25 stocks of 2% each. And we hope that the stats work for us, which is that a large number of them do well and maybe 1 or 2 disappoint, that they have entered there, which is a very good thing as far as we are concerned. And now they have to perform on their own and do better for us.
Sure. Samir, just stay on. We have a minute to go before the market opens. It's absolutely quiet right now. And we're counting down, of course, to the RBI policy. I think it's just wait and watch mode. There is an expectation of a rate hike as well this time around. But let me toss it back to Shireen, because there's that huge panel there which is going to ring the bell in just seconds from now. So Shireen, over to you.
Well, thanks very much, guys.
Let's get the countdown going. 10, 9, 8, 7, 6. Hang on. We got a little ahead of ourselves.
We got a little ahead of ourselves.
Let's relax for a bit. On the count.
Hassan, you have to give us the count.
This was just test check.
All right, we are set for it. Let's go for it. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Woohoo!
Everyone. Ashish, please.
Come. Please, come. Come, please come.
birthday. And what a momentous occasion it is, because 23 years of business news, views, opinion, and look at the star panel over there ringing the bell one after the other.
I think the sheer force of the personalities there has forced the market to open in the green. You know, Shreen was saying earlier, I mean, hopefully the market opens the green. It has.
And
We're up 10 points already. So I mean, it's a good start.
It's worked. It's worked. The magic has worked, guys. The market is in the green. The mid-cap is up. Mid-cap index is up almost 70 points. I don't know whether it's the magic of the bells ringing there or Shireen's green outfit.
Absolutely.
But it has all worked out. So kudos to you guys. Okay, well, all right, let me just quickly take a few rates before I toss it back to them. So the first rate on the index is absolutely quiet with a bit of a green hue. 18,650 is where we are holding. The top gainers this morning, BPCL is topping the charts with a 1% gain, followed by L&T, Cipla, there's Asian Paints, Grasim, SBI. A lot of banks actually are holding up. There's ICICI Bank as well, that's up about 0.5%, and SBI Life is also trending in the green. What's not looking that great this morning, once again, is technology. So you have TCS, Wipro that are in the red. You have Kotak Mahindra Bank that's a tad bit soft. ONGC is under a bit of pressure. There's M&M, Tata Motors, Maruti. So there's been a bit of profit taking that you've seen in the auto space in the last many days. So do keep an eye out on that. And in the broader markets, a couple of stocks do stand out, like Jindal Stainless, Sanghi Industries, SpiceJet, all trending in the green line. But apart from that, you'd have to say it's a very, very quiet start. I guess, Prashant, you know, just wait and watch mode before the RBI policy kicks off.
I mean, this is the definition of wait and watch, right? I mean, neither here nor there by even 2 steps, absolutely. You know, you got 5-star, which is the recent listing. It was limit up yesterday by 20%. We got 5.5% again today. So this one it's a recent listing. I mean, a few days old in terms of its listed life. The rail stocks, which we've kind of all been highlighting for the last so many days, IRCON is up about 1.7%. I mean, I can see you usually are able to spot at least 1 or 2 within the first 30 minutes doing well from that space. HDFC AMC is up 2% at 22.38. I don't know if Navneet there wants to weigh in. There's news flow there as well. BKG is up 5%. BKG, of course, reported numbers, so that's coming up with volumes as well. Varun Beverages is up about 1.5%. You got Sanghi Industries, Reddington, and a bunch other which are doing well. Kotak Bank is down 0.75%, and there is ONGC, which is down about 1.5%. So that's the market opening. Not very much at all, just 10-point change lower for now. Let me throw it back to Shireen at the NSE. Shireen.
Nice.
Well, you know, I think we woke up this morning and everyone's talking about recession and we're likely to see a bit of a pullback. The lucky mascot came in there and she said that she wants to see the market in the green. And as I was listening to you guys, I said, yes, it's in the green. So pretty good start for us. 23rd birthday, we are celebrating in style. Navneet, since you're on my side for the time being, you know, we're trailing the index a little bit. You know, the index is actually at around 18,500 thereabouts. We are at our 23rd birthday. I want to know when that catch-up takes place. You know, when does the index run ahead of ourselves? You know, when we celebrate our 24th, 25th birthday, can we see the index closer to those levels?
Not too far, I guess.
Yeah, so by next year, you think so? That'll be a far cry away.
It's a long-term story. I don't think there's any point predicting the next 6 months, 1 year. Maybe Madhu and Sunil can do that.
Let me try my luck with Sunil and Nilesh.
Go ahead.
Sunil, you know, the big disappointment, or maybe the mid-cap and small-cap has relatively underperformed in 2022. You've been, like, you know, in the mid-cap space for so long now. What is your sense for 2023? Will the mid-caps and small-caps do a catch-up, or the valuations are still expensive, so that one should avoid the mid-cap and small-cap space?
So first of all, congratulations to CNBC on a fabulous journey. Incidentally, my daughter also celebrates her 21st birthday.
Oh, wow.
So I think this opportunity to wish her happy birthday, Kushi. So I think if you look at the constitution of the Indian economy, Indian economy is driven by entrepreneurs.
Right.
And that means that we have a lot of budding entrepreneurs who want to, do something for their own self, for the businesses. And I think that is what mid-cap and small-cap is all about. It's all entrepreneur-driven businesses. And the good thing is, if you see, so many unique businesses are coming up. And so many new businesses we have not even thought about are getting conceptualized, and, the spirit of entrepreneurship is there. And I think as long as the spirit of entrepreneurship is there, and as long as growth is there, the smaller and mid-sized companies will always grow faster than the large caps. The only thing is that because they are smaller in size, I think in a challenging year like this one, where we had a war and we had 30-40-year high inflation rates and interest rates shooting up, I think despite that they have held their ground. So I think the highway is just about to come, and there's a long way to go. Not only for the mid-cap and small cap, but for the economy as a whole. Okay. And I think to Nigel's question, I'm very sure before 25th birthday we'll do a catch-up.
All right.
That's a good one. That's a good one. So Madhu, I want to ask you, your big bet middle of the year was PSU banks, and that's played out beautifully well. Are you still bullish, or do you think now there are a couple of other sectors as well which you are equally turning bullish, like you in PSU banks?
I think as Sunil was saying, this is a time to really identify individual companies. While the PSU bet has paid off, I think there are tremendous opportunities in mid-cap and small-cap space. And let me just say, I don't want to spoil the party, but when we hear about this 10-year, 20-year bull run in India, and everything looks like a Ram Rajya, at that time we have to be a little cautious that we should not take out our hat of risk. We must ensure that adequate allocation and intelligent allocation happens, and it is nature of markets that there might be correction and there will be correction. That is how markets have been. But I would say in that correction, you have to decisively buy, because the India growth story will continue.
Okay, all right. Nilesh, I want to ask you a question, and I promise you, Nilesh, as I've told you in the past, I'm keeping my SIPs going. My children are going to see a very good future once they go to college. But from here on, what about asset allocation? 2023 people are saying it's going to be a little bit of a tough year. So from the top, asset classes, equity, fixed income, gold, let's not talk about crypto for now, right? I think it's gone out of fashion. Incremental allocation from here on, real estate as well. What should it be to?
So one, thanks Nigel for maintaining SIP. Your kids will remember you as a great father.
Absolutely.
Number two, as Madhubhai mentioned, asset allocation is key. It was important yesterday, it is important today, it will be important tomorrow. And in 2023, it's quite likely that the return differential between different asset classes, be it debt, be it equity, be it real estate, will narrow down significantly. So maintaining a proper balance between debt, equity, real estate will be critical. And if there is a correction in market, that will be the time to go long equity or increase allocation to equity. Now coming to the stock, I want to add one thing. See, stock market is exactly like CNBC TV studio. Not the one you have in Parel today, but the one where you started the journey. It was in Worli area, and we had to go through a mountain of coal to get into the studio. So stock market is also like coal mine. There are diamonds there, but you should know how to navigate the way.
Okay, all right. So, we're talking about a marathon in the short sense, so we're not talking about the 100-meter run. But, Ashish Chauhan, sir, just a quick word. It's been a good journey. We have reached out to you numerous times, and you always lend us a ear, and you always try to help us out as well, and it's been a great journey. Just a quick comment from you. Our 23rd birthday, a message to our viewers as well.
No, congratulations. I think CNBC has been a mature child from day one. So I think at 23, I think it's a very, what I call, sometimes when I watch TV, I think people are being motivated to play 2020, while investment is not even a test match. You have to play many test matches in your life, and that's where I think CNBC is focusing on. So I'm really glad, and somewhere, although it's 22 years complete, and I can see my people who we started career with, Madhu or Navneet or Nilesh, they are being called veteran, and I'm still an upstart. And so And basically, we are on different sides of the game. We are like umpires, not to be seen. But if we get seen, then the game is not going well. So I'm sure all of you all continue to maintain the decorum going forward also. And that's what my fervent hope is.
So I think the players are doing well, the umpires are doing well, and the commentators also were doing well, right? We all agree, right?
Nigel, we have the Lupin management as well joining us today. So let me toss it to Ekta. Ekta, you can just grill the management. Don't grill him too much.
Well, Ramesh, we're talking about the past 2 decades in terms of our birthday. But at the same time, pharmaceuticals and healthcare has also grown exponentially at that point. Where do you think we're probably going to be 2 decades from now when it comes to pharmaceuticals? I'm not talking about the near-term hiccups that a lot of the pharma companies face.
Well, firstly, we are here to celebrate CNBC's 23rd birthday, so it is inappropriate to talk about Lupin at this stage. But having said that, let me first congratulate the management of CNBC for a great achievement, world-class business, economic and financial reporting from India. And as India transitions from a $3 billion to a $7 billion economy in the next few years, this is going to be extremely important. CNBC has been a great platform for potentially bringing in the regulated, the regulator, the government and industry for disseminating our perspectives and obviously educating a lot of people. Turning to healthcare. Healthcare in India has come a very long way. But having said that, we have actually been big into re-engineering. Products that so the paradigm was low-cost manufacture in India, low-cost R&D in India. We are now kind of transitioning into the innovation phase. The branded markets for potentially the emerging markets are still alive. But having said that, as we transition to the innovation space, you could expect Indian pharma also to kind of blossom and do extremely well in the long term.
So can we expect an innovative, patented drug from India in the next 2 decades?
I would say yes. There are a lot of companies focusing on that, and I would expect certainly that would happen over the next several years, so to speak. We all are pretty optimistic.
Okay, back to you.
All right, Madhu, we earlier heard from Samir Arora, and he was saying these new age themes, some of them have started becoming attractive right now. And he's seeing some exhaustion, that's what he said, and that's the general sense. Nimesh has been alerting us, this large trade is going to take place, another one is going to take place. Most of them are getting walloped up. What's your sense on this theme from here on? Madhu, I'm not asking
I'll be very honest, they have become analyzable. So I would say that, they were beyond our reach when they got listed, and it didn't make sense at all to invest any time on these companies. As per the valuation metrics and the experience which we have had, they have corrected significantly. These are very good businesses.
Yes.
I would say they've created tremendous platform. They have a very good corporate governance. Some of the leaders who are leading these companies are extremely passionate and good. So I've started spending time on these companies, and I am sure somewhere down the line they will become good buys.
Okay, interesting. So Nimesh, that supply overhang, it appears
it's going to be there. It's going to be there. There is a lot of supply.
I think, as my friend, philosopher and guide Rakesh used to say, अगर लड़की अच्छी है तो ब्याहने वाले बहुत मिलेंगे. Don't worry about the supply and all. There will be buyers and sellers in the stock market, so all the supply will get absorbed at a price.
Okay. All right.
Since we have so many of the market veterans here with us, and the referees as well, and we're going into the MPC in a short while from now. Let's do a quick dipstick. What's the expectation? 25, 35? What do you expect from the MPC? Sunil, let's start with you.
No, I'm not an expert, but what I heard from experts yesterday, it's 35 basis points.
35 minutes.
I'll go with 35.
Madhu?
I think it's a mere consensus. 35 bips is what I would
What about
expect.
you, Navneet?
Consensus, 35.
35.
Looks like it's a consensus for the RBI policy.
And the RBI governor is listening in it.
Nilesh, I want to ask you something. I've heard you in so many presentations talking about past examples, and instead of buying Eicher motorbike, which Nigel drives, had bought the Eicher share, you would have bought a Mercedes or a big car today. Any new company that stands out for you, which looks like that's going to be the next 20 years or 30 years for you?
Well, I can't talk about stocks, so I'll say invest in Kotak equity funds. And we hope that one day your bike will get converted to Rolls-Royce.
Interesting one. In fact, I got my first salary from here and I went straight to the showroom in Bandra and I booked the bike for that, very minimal amount and took the rest on loan.
So on that point of car, I think it was very heartening for all of us in the industry that luxury car manufacturers said that cars are selling less because people are doing
more SIPs.
rather than doing EMI.
Nilesh, what do you have to say about that?
So one, I mean, clearly savings and consumption both are necessary to drive economy.
Yeah.
So in all our messaging, we have always said that you should buy a bike and also buy the shares. Just don't buy the bike, just don't buy the shares. Because if you only buy shares and no one buys bike, then shares will not go up. So do the both things. Equilibrium, balance, allocation is necessary between savings and consumption.
Right. Now, at this stage of my life, Nimesh, but even I'm going more for a bigger SIP rather than the bike. So I don't mind riding the same bike. Nilesh, I'm on the right side. All right.
Since we have the Lupin management here, what I want to understand, and just to take the point that we heard there from Nilesh forward, there's been a lot said about corporate India's risk appetite. And the finance minister on several occasions has asked corporate India to go out there and invest and start the cycle of investment. What's the sense that you get at this point in time? There's been a plethora of PLI schemes across 13 different sectors. The first one, of course, was for the pharmaceutical sector. How is that playing out so far for industry, and what's the expectation from here on?
I think the government has done a grand job in terms of several things in the last several years to kind of augment capital formation in this country, starting with, in fact, rationalization of the tax structure itself, the PLI schemes, and there's more to come, essentially. So I think all of this will certainly go a long way in terms of augmenting the overall capital formation. It's about 30% of the GDP, but one could expect that to potentially grow exponentially in the years to come, and that will set the stage for India 7 trillion and more, and as Mr. Ambani was saying, 40 odd trillion over the next several years, so to speak.
Yes.
So, Sirin, on the PLI side, I think we still need to take our game to the next level. Yesterday, I was talking to one multinational company. They are putting up a $25 billion plant in China. The promises, according to them, is 3 months environmental clearance and 12-month factory operational, and also allocation of gas from Russia. Now, this is the game China is playing. If we have to compete with them, we still need to take our game a lot higher than what it is today. We have all the ingredients, but we need to ensure that the central government, state government, and local government works together in delivering seamless delivery to the entrepreneurs. Today, I don't think so we have the ability like China to say that in 12 months I'll make your factory operational. Intent is there, but we need to now execute on the ground through seamless delivery between state, local, and federal government.
Yeah, that's an important point that you make. And since we're talking about China, and of course the theme over the last few months has been that China is increasingly uninvestable, but that doesn't seem to be sort of the reality on the ground, Nilesh, and you give us an example of that clearly not being the case.
Yeah. So China is still getting more foreign direct investment than India. And Chinese equity also has started attracting some investor interest, especially in the month of November and December. My feeling is that China is a tactical play. It's so cheap that you want to take a trading punt on it. India is a long-term growth story. We are expensive on a one-year basis, but on a 5-year basis, we are cheaper. So India will be more strategic allocation and China will be tactical allocation.
Okay, all right. Since we're talking about China, Sunil, I wanted your opinion on the metal space itself. And I'm not getting to stock, Sunil. I'm cautious about that. But, I have checked, the holdings that you all have. And a couple of those names, got in very, very early. And some of them are doing well even today. What's your sense from here on? If China is going to unlock, is that metal play going to come back with regard to stocks that are listed in India?
So first I have a little bit of a view on China. So I've traveled a lot last 3-4 months meeting a lot of investors. I think China last 10 years has been a disaster in terms of an investment destination for investors.
Yeah.
And obviously India, despite all its ups and downs, is a country which has doubled in dollar terms, more than doubled in dollar terms over the last 10 years, which is a CAGR of almost 8% plus in dollar terms. I think that, yes, in the last 1.5 months, Chinese and Hong Kong stocks have moved up. But this time, investors would look at this rise to trim China and invest in India. That is what my view is. Valuations and all is fine. We have seen valuations for some countries always been high and some countries always been low. And if you go back, look at Japan, look at Korea when they were growing, look at China when they were growing, and now India is growing, I think valuations can go berserk. So that is one thing. Secondly, on your point about metals, I think what has happened last 4-5 years, that the metal companies had the sweet spot of 2 years where they were able to systematically clean their balance sheets completely. So the debt, I would say the debt to EBITDA, which used to be like 3-4x or 6x also in some cases, now become half x. So even in this kind of an environment where there were export duties and China was shut down and prices had collapsed, companies were still making some profit. Now with things opening up, and you can't replace metals with some technology, you need metals for metals, our view is quite constructive. The only thing is, these are not like 5-10 year structural stories. These are 2-3 year, I would say, cyclical structural stories rather than 5-6 years, and therefore you have to have the patience of getting in and sitting on it with no performance maybe for 6 months and 12 months. And you're right, a few of them we have picked up, but the good thing is that I'll only highlight our winners, we don't highlight our losers. So that
Sunil, I didn't highlight them yet, even the winners.
Madhu, you were early in identifying the PSUs and the PSU bank stocks. Is this now the time for the infra plays as well? Again, a sector which has not been tracked much, not been chased much, there is hardly any ownership. Is this time now to look at infra stocks as well?
I would say so, Nilesh, and I've been very vocal in last few interactions with you guys also, that overall the whole sector has become cheap. The competitive intensity has gone down. They have cleaned up their balance sheet over a period of time. And there has been very little or no stock performance in the last 10-15 years, I would say. And, whatever was the pending dues from the government side, significantly it is also getting cleared. And if you look at order book of these companies, in the last 1 year also, a lot of these companies have lifetime order book positions.
But they've rallied also, right? The rail PSUs, the defense PSUs, they all have rallied hard. Is this time to now look at private
that is the whole point, Nilesh. This is the India story. That it is not about identifying a sector or a theme. It is ultimately betting on the right companies. And I can bet there are a few right companies that still exist, which will give you good returns.
Okay, yeah.
So as Madhubhai mentioned, infrastructure sector long term, it has hardly delivered any return. But if you picked up right stocks, you still made decent return. Our infrastructure fund 10-year SIP return when I last looked was 17%. In a sector which hasn't delivered any return to investors, by picking up stocks you were able to generate return.
Okay, valid.
This is the point. This is the real India story. This is a real India story, wherein, if you just spot the right companies and the right theme at the right time, then you have made money. There is, in all of this glamour, ultimately you have to be able to get to the right companies and the right sector to be able to make the differentiated returns.
And those who don't want to spend time on researching the stocks, I think for them the best way to play the India story is a 10,000 rupee SIP in HDFC FlexiCap fund is 12 crore rupees. So if you want your children to be crorepati for sure, that's the way to do it.
Nicely done,
But it's a coincidence, Shireen, but it's a coincidence that HDFC AMC got incorporated in the same year as you got set up.
Yes.
So that time the Sensex was hovering around 3,000 to 4,000 for almost 3 years. And it was a tough time for you, I'm sure, to create that cult of investors who watch you, and at the same time for us. But today we manage 4.5 lakh crores, and we talked about how the industry has grown and how you have grown. So that's the India story. Over the next 20 years, as we are entering this Amrit Kal, it's only going to be better. We need to have that faith. Our time has come.
Okay, our time has come. I just, on that point, want to get Ashish Chauhan into this conversation as well. And I just want to understand from you, because you've seen the complexion of this market change dramatically, as Navneet was pointing out, from where we were to where we are today. If you were to mark the key milestones as far as the market journey is concerned in building this cult of equities, what would you hold out as the key milestones?
I have always believed that maintaining trust of people as a system overall is the most important part. And somewhere on the line, I think we had a big break in 1991-92 where things went wrong. And that's where I think liberalization happened. That's where the automation of markets happened. First time in the world, Indian markets were the pioneers of automation, screen-based trading. The televisions came, and I think overall the kind of regulatory structures we have evolved, I think it's amongst the best in the world in terms of moderating things and maintaining trust of people. Ultimately, what is stock market, right? An unknown person is investing money in completely unknown person in an unknown city. You are, as an investor, you are never going to visit that company's plants, but still you have a complete confidence that your money will not go waste. And when the profits come, again, nobody will take it away. And that is your trust in your government, in your stock exchanges, in your regulators, and also of the people. And for me, what we do today, every day, using CNBC, otherwise using these veterans who invest money, is basically enhancing that trust. Till the time we trust each other, we'll continue to grow. When we reduce that trust, that's where we have an issue. So I always say that we are all drinking out of the same pond, and let's not dirty the pond, right?
Yeah, absolutely. I think we've got about 2 minutes to go, so let's get wrap-up comments from each one of you. Madhu, I'll start by asking you, where do we close 2022, and where do you believe the markets are likely to be in 2023?
I think, again, I would not hazard a guess for 1 year, Serene, but longer-term bullish. I think in the short term, there is a possibility that markets will see some correction in 23.
Sunil?
No, again, I think very tough, but I am a little bit more optimistic. Obviously, 22 has been challenging. I think 23, and particularly in the run-up to the general elections of 24, and also the fact that the world is going to be significantly better in 23 than it was in 22. I am more optimistic on 23.
Follow Nigel, sip karo, mast raho.
Children are going to enjoy.
The mood in corporate India, what's the expectation for 2023? Pause, or do you believe that we are likely to see a lift-off of investment?
I think the secular trends for corporate India are very well set, so it is going to be optimistic in the years to come. Well, can't speak about, in fact, the immediate future, but the long-term trends are very, very palpable.
Navneet?
The formula for wealth creation is sound investment, plus time, plus patience. So while doing the SIP, remember that STP, and you will do very well.
Okay.
Ashish?
For me, whatever you do, please sort of be moderate and be disciplined. Thank you.
Be moderate and be disciplined. Nimesh and Nigel, a final say with the both of you before we let the MPC take over the action.
Well, Shreen, unfortunately, we have not had a look at the markets in a while, but, we are in the midst of an equity cult that's developing. But you don't need to look at the markets today. Just look at the green color. And that's the mascot. That's the mascot, but market's looking pretty okay. We have some of the rates that are going up there. So the Nifty Bank is in the green with a gain of around 0.2%. The RBI governor's commentary is going to be very, very important, Nimesh. And, later on, as the course of the day goes, I'm sure you've got some tidbits for us as well.
For sure, we'll do that. I mean, towards closing bell, we'll do that for sure. But I guess, I think for at least for the first half, the RBI policy is going to be very important. Though it's a consensus that 35 basis points will come, but let's see. Let's hear out from the governor himself at 10 o'clock. And let's see how market
I think what's going to be important is also the commentary and whether there's going to be any change as far as the stance is concerned. Right. That's where there has been some disagreement, even as far as our CNBC-TV18 poll is concerned. So we are going to thank all of our guests for joining us here bright and early at the start of our 23rd anniversary celebrations from the National Stock Exchange. Thank you very much to each one of you for being here with us. But remember, it's another very important event coming up. The MPC will tell us what happens as far as the rate trajectory is concerned. And of course, our fabulous colleague Lata Venkatesh will pour over all of the data and the fine print. What does the commentary say? Is it going to be hawkish or dovish? All of that coming up for you through the day on CNBC-TV18. And of course, the celebrations will continue. We are going to take a short break and be right back with you with the RBI MPC. That and more in a minute.